Welcome back to the Building Equity Podcast, here to go over November 2023's foreclosure numbers. I'm James Schlimmer. Thanks for being back. Listen, before we start, we're not giving you any investment advice. We're not giving you any legal or tax advice. This is strictly for educational purposes, and that's the disclaimer. Listen, there's some amazing numbers here in these foreclosure starts, sales, and REOs, specifically when you look at the year over year. If we actually year over year, year to date numbers, which are fascinating. But before we dive into that, if you were thinking about buying and selling real estate with your self-directed IRA, you should know about IRA Title Pro. IRA Title Pro is what makes all this happen. Head over to IRA Title Pro and you can take a look at the wonderful suite of real estate related resources we made for you, a real estate investor who uses their self-directed IRA to buy, sell, and lend. So make sure you check that out. Listen, let's dive into the numbers here. Your screen should change, but if we start with foreclosure starts, November came in at 21,844 foreclosure starts. If we compare that to what we saw in October of 22,910, we actually saw a 4.6% decrease in foreclosure starts in November. However, if we look at year over year, if we compare November 23 to November 22, we actually are up 7.9%. There were 20,243 foreclosure starts in November of 22. In 23, there were 21,844. A lot of numbers here, but we're up 7.9%. But here's where it gets really interesting. If you look at the year-to-date numbers, in November of 22, up until the end of November, there were 222,681 foreclosure starts. If we compare that to where we are in 23, there are 244,313 starts, which means from a foreclosure start year to date, we're actually up 9.7%. I would call that a significant uptick in foreclosure starts. Now, if you couple that with credit card debt utilization, if you couple that with subprime auto loan delinquencies, you can kind of see the narrative, the health of the economy. Now, anyways, we look at volume. You know how we like to look at volume or per 1,000 households. Volume, foreclosure starts, Texas, California, Florida, which is common because those are very big states. But if we start looking at per 1,000 households, we've got Connecticut, Delaware, and South Carolina. It tells a completely different story about what's happening with foreclosure starts. So if you're in Connecticut, Delaware, or South Carolina, some distressed property investment opportunities that just started in November of 23. Now, if we take a look and we head over to foreclosure sales, your screen should change in a second here. There were 15,876 notice for foreclosure sales. Remember, that's when the judge, in the midpoint of the foreclosure process, depending upon the state, we'll talk about that in a second, that's when the judge issues a date of sale for that property. Now, for about 22 states in the U.S., the notice for foreclosure sale is the beginning of the process. So take that with whatever you want to do with it, you know. Okay, so November, 15,876 foreclosure sales compared to October of 17,095 foreclosure sales. This is notice of foreclosure sales. There was a negative 7% or a 7% decrease in November compared to where we were in October. If we look at year over year, in November of 22, there were 14,297. We are actually up 11% in notice of foreclosure sales if we just look at last November. If we look at the year to date from last year, where we stood in November of 22, there were 151,872 notice of foreclosure sales at the end of November. If we compare that to where we are today in November of 23, there are a total of 175,289 notice of foreclosure sales year to date, which means we are sitting at the end of November and notice of foreclosure sales year to date are up 15.4%. Huge number, absolutely huge number. If we look at volume, you've got your Texas, California, Georgia. If we look at per thousand households for notice of foreclosure sale, Texas, Alabama, and Georgia. Now, if we move over to the REOs, this is when obviously the property went to auction. It didn't get purchased by an investor at auction. The bank took the property back over. In November, there were 2,558. Compared to October of 23, there were 3,332. This was a big one. It's actually a 23.2% decrease in REO properties in November of 23 compared to October of 23. Huge decrease. Does Thanksgiving have something to do with that? Does the holiday season have something to do with that? I would bet it does. However, it is what it is. There's a 23.2% decrease in REOs in November of 23 compared to October of 23. If we look at year over year, in November of 22, there were 3,770 REOs compared to the 2,558 in November of 23. We're actually down 32.14% in REOs looking at November 23 compared to November of 22. If we look at REOs from a year-to-date standpoint, in November of 22, at the end of November, there were a total of 39,191 REOs in the entire year of year-to-date November 2022, compared to 39,582 year-to-date in 2023. There's only a 1% increase. It's actually 0.99% increase in REOs. So, which is really interesting, because if we go back and you look at the foreclosure starts, year to date, we're up 9.7%. If you look at the notice of foreclosure sales, we're up 15.4%. And if you look at REOs, we're only up 0.99% or 1% if you're looking at year to date numbers compared to last year. Well, that just means that these foreclosure starts and notice of foreclosure sales haven't made their way through the process yet this year. That's essentially what's happening. If we look at REOs from a volume standpoint, you've got Michigan, California, and Illinois, and per thousand households, you got Alaska, Michigan, and Maryland. So listen, thank you so much for tuning in. I hope this information helped. I hope you click subscribe. I hope if you are using your IRA to buy, sell, or lend on real estate, please make sure to check out IRA Title Pro, and thank you so much for your time.